welcome back to the Financial Izzy channel, everybody. Now, a few videos back, I told you guys that I was going to create a whole other video on hedge funds, mutual funds, and ETFs because that required quite a bit of explanation. And just so that I don't miss anything, I have my notes here. There will likely be a few moments where I'm reading off my notes to make sure I don't miss anything or mess anything up. So if I'm not looking at the camera, don't worry about it. But I just don't want to make sure, I want to make sure that I don't miss anything because this is important. Now, there's a lot of benefits to all of these. All of them are very popular choices for diversifying your portfolio, but each of them have different factors as to why, and that's what we're going to go into first. So by the end of the video, you should have a very clear understanding of what each of them are beneficial for and why you should consider each one for different purposes. So let's start with hedge funds. Now, these hedge funds are private investment partnerships that cater to accredited investors, usually high net worth individuals. They employ a large range of sophisticated strategies to generate high returns. So without the mumbo jumbo, you put it in, there's certain strategies that will bring it a lot higher in a return. But that also means that there's usually higher risk. As I've said before in my videos, higher risk can mean higher returns, but you can't have one without the other. There's no genie in the bottle here. So higher risk, but possible of higher returns. So they can use leverage, short selling, and derivatives, which are not usually available in mutual funds and ETFs. Again, strategies for higher return. Now, hedge funds are actively managed by professional fund managers. Other accounts are not. Now, as a result, the cons of a hedge fund are that they have much higher fees. They can have around 2% to 20%. That's a lot depending what you put in. So just bear that in mind. High amounts. Again, I told you I was going to refer to my notes. I wanted to give you the numbers, and I'm not trusting myself to remember that off the top of my head on camera. So I use notes. Then there's also limited accessibility. So they are typically only accessible to really wealthy investors. So if you are middle class like I am, or poor, we're not really likely to get into the hedge funds. But that's really fine with me. They don't actually have that much interest for me personally. If that's something you aspire to, by all means go for it, if you can. So then there's lower transparency. If something goes wrong, you may not be able to see why. They may not be so open and honest about it. Because again, these are the elites. They're charging high fees for it. If something goes wrong, they don't want it to look like it's their mistake. Or if it's yours, so I feel like most people in that industry would probably be eager to put it on you and not them. But anyway. Then they often have lockup periods and limited redemption opportunities, which reduces the liquidity of your investment. And if you're new to this, liquidity just means how fast can you get your money back. If you invest your money into a house, that's not a very liquid investment. How fast can you sell a house? Versus if you have even like stock, you can sell your stock and give it a few days and get it back. Or you can have it in a savings account in the bank and get it same day. That's liquidity. How quickly can you get your money back? Hope that makes sense. That's hedge funds. I know we're trying to go through this quickly. I'm trying to explain this because there is a lot of technical stuff. And personally, hedge funds are not something I'm really big on myself. So again, I'm referring to my notes so I get everything right for you. Then there's mutual funds. Mutual funds pool all the money from the investors to invest in a very diversified portfolio of stocks and bonds and other securities. There are a lot of different opinions by all of the experts like Tony Robbins and Robert Kiyosaki and Dave Ramsey and all that of whether or not mutual funds are good. I personally trust myself more than I trust some of these experts, so to call them. Not to bash on them, but I do not use mutual funds. I would rather do all of my own research and risk it myself because I am very, very thorough with my research, but not everybody is. So you might like mutual funds. Tony Robbins and I think Robert Kiyosaki, I could be wrong, don't quote me on it. Tony Robbins for sure is not a fan of mutual funds. He does not recommend them. Dave Ramsey, on the other hand, does. He loves mutual funds. He says they are the way to go. His books talk about the many benefits you get from mutual funds. I personally do not like them, and here are the reasons why. Well, first I'll list the benefits and then I'll list the cons. That's right. I have an order here. Pros and cons. A lot of diversification, which means you're more likely to succeed because you're not just investing into one company, you're investing into a ton of companies with that one investment. So if one company goes down, the others should still be fine. A lot of diversification makes it a good thing. Professional management, you get access to very experienced fund managers and research teams. More accessibility than you would get in a hedge fund, so which means that you are more capable of getting in regardless of how much money you have. So if you're poor or middle class, you can still get into a mutual fund. And then there's a lot more transparency in what's going on there. And then the cons, management fees, once again, high prices just for that. There's the performance. Actively managed funds may underperform their benchmark after fees. So that's kind of a twofold, management fees and performance. You get less money because of it. Then there's the tax efficiency. They're far less tax efficient with ETFs, in comparison to ETFs, sorry. So as I said, not really a big fan of mutual funds myself. I'm not a big fan of the fees and the how they're not very tax efficient. And I like to be in control of my own stocks. I like to pick and choose and do the research myself, but that is me. Really, mutual funds are best for someone who isn't very confident in the stock market, in which case you're signing over your money towards someone who is super experienced and really confident to get you the best investment possible. But you pay for that. Then we go into ETFs, exchange traded funds. ETFs are investment funds traded on stock exchanges, similar to individual stocks. Most ETFs aim to replicate the performance of a specific index. So they're much lower cost. They generally have lower expense ratios in comparison to mutual funds, especially in comparison to a hedge fund. And then they're more tax efficient because they're more tax efficient due to the in-kind creation and redemption process, minimalizing the capital gains distributions. But you're still going to be paying taxes on those. Of course, you're going to be paying taxes on anything, but again, they are much easier to liquidate because they're traded very much like stocks, and they have the option for limit orders, stop loss orders, and margins. And then there's a lot more transparency with them as well. As for accessibility, I think pretty much anybody can buy ETFs. I haven't seen anything about them requiring a certain minimum investment amount. I haven't seen any of that. Of course, it depends on what ETF you join. As for the cons, they will have trading costs as well. There's fees to be paid. Investors may incur brokerage fees and bid-ask spreads when buying or selling these ETF shares. It's not as actively managed as a mutual fund. There's less work, but it is still being worked on. So there are still fees. It's just cheaper. There's more market risk to it because, like stocks, ETF prices can fluctuate throughout the trading day. So there's short-term market volatility. Then there's tracking error. Some ETFs may not perfectly replicate the performance of their underlying index, leading to the tracking errors. I prefer ETFs personally to mutual funds, but I still typically buy in companies myself. But ETFs is another example of a big group of funds. So let me see. Where was it? All right, I found it. Okay, so this is what I wanted to go over of the reasons why I'm not really a fan of hedge funds, mutual funds, or ETFs personally, but that is my preference. You can do what you want with that. But I just want to make sure you have all the information to make the most informed decision that you can. Now, the strengths of ETFs and mutual funds are things that they're both very similar in. They aren't direct investments, they're conduits of investing. So they act as the connection between the investor and the investment, but you're not actually investing into this certain asset. You're investing into the ETF or the mutual fund. And so they pool the money of all of the investors together into this investment to invest into more investments. Like everybody puts in a one, it goes out to a bunch of things to grow the investments up more, hopefully. And then it has more diversification, which means if something fails, you're less impacted because you've invested a whole bunch of stuff. So if you invest $10 into 10 different companies and one goes down, you still got the other $9. That's kind of how it works. So then it's the things I don't like about it is that investors don't really have a choice about the makeup of the portfolio of either the ETF or the mutual fund. So the benefit, in my opinion, of the ETF over the mutual fund for me is that there's more control. An ETF holds similar securities, but the portfolio isn't typically managed, which means there's not as much going on inside there. So that's why it's cheaper, as I stated before. But it can be bought and sold and put into options and traded and all that. You can't do that with a mutual fund. So, you can specifically buy also ETFs in food or fuel or gas. No, that's fuel. Or water or energy, things like that. A mutual fund, you have less control and less choice over what goes into it. It's whatever the brokers think is going to go up. So if there's something that for some reason you don't want to be a part of, then you don't have nearly as much control over that in a mutual fund. So anyway, that is mutual funds, hedge funds, and ETFs all explained. Which one is right for you? That's up to you to decide. Hedge funds offer high potential returns and diverse strategies, but come with high fees and limited accessibility. Mutual funds provide professional management and broad diversification, but might have higher fees and higher tax inefficiencies. ETFs combine the benefits of mutual funds with flexibility and cost effectiveness of stock trading, offering low costs, tax efficiency, and intraday liquidity. So with that recap, it's up to you what you want to invest in. Now, I know this is a lot. I tried to make it as non-technical as I could, but I just kind of found myself stumbling over it a bit. I hope that this was beneficial for you. I know it was a lot. If you have to go back and rewind and watch stuff, I know it was kind of a bit scattered at moments, trying to simplify it as best as I can. It's hard sometimes to know how to navigate the stock market safely, but you can do it. Learning how to do anything new is a challenge, but you've got it. And the first thing to do is to look up ways to do it. You're on a YouTube channel. You can go subscribe to the newsletter for more information. I know this seemed a bit over the place, so I do apologize for that. I have a script that I'm trying to work with for this, but I'm looking over some of my notes. I'm like, that's still not simple enough. So you have my book, Your Simple Guide to Money Mastery, available online. That goes into this even more. So feel free to go check that out. Like and subscribe to the channel. Leave a comment. Let me know what you thought about this. I'd love to be of more help to you guys. I know this specific video has been a little while in coming. I said I was going to do this a while ago, and I just forgot. I got 2 kids. I've been kind of busy. But I hope this answered your questions. And if there's something I missed that you want more information on, leave a comment and let me know. I'll get back to you. So once again, like, share, and subscribe. Love to hear from you guys. Have a wonderful week. Rooting for your financial success, guys. See ya.